I'm Josh Katz, CPA, and today we're asking whether you should form an LLC or elect to be taxed as an S-Corp. Which one will save you the most money and the most headaches? This is one of the most common questions I get from small business owners. In this video, I'll break down the key differences between an LLC and an S-Corp and show you exactly how the taxes work and explain to you which one might make the most sense for your business. By the end, you'll know which option could save you thousands of dollars in taxes and which one might be a waste of time. Let's start with the LLC. An LLC, or limited liability company, is one of the simplest and most flexible business structures you can choose. By default, if you're the only owner, the IRS taxes your LLC like a sole proprietorship. If you have partners, it's taxed like a partnership. What does that mean? It means that all profits from your business flow directly to your personal tax return. You report the income and pay taxes on that. The big advantage of an LLC is simplicity. It's easy to set up, easy to run, and gives you liability protection. But there's a drawback. All of your profits are subject to self-employment taxes. That's Social Security and Medicare, around 15.3%. And that can add up quickly. Now let's talk about the S-Corp. Here's something a lot of people don't realize. An S-Corp is not actually a type of business. It's a tax election you can make with the IRS. You can have an LLC or a corporation that chooses to be taxed as an S-Corp. Why do people do this? One big reason is the potential tax savings. If you're taxed as an S-Corp, you split your business income into two categories: salary and distributions. Pay yourself a reasonable salary, and that salary is subject to payroll taxes. But any additional profit you take as a distribution is not subject to self-employment tax. That's where the savings comes in. Let's put some numbers to it. Say your business makes $100,000 in profit. If you're taxed as a standard LLC, the entire $100,000 flows to your personal tax return. You pay income tax plus self-employment taxes on the full $100,000. That's about $15,300 just in self-employment tax alone. Now, let's say you elected to be taxed as an S-Corp. You decide a reasonable salary of, let's say, $60,000. That salary is subject to payroll taxes just like a W-2 job. But the remaining $40,000 is treated as a distribution. And here's the key: distributions aren't subject to self-employment tax. So instead of paying that 15.3% tax on the full $100,000, you're only paying it on $60,000. That can save you more than $6,000 in this example. And that's why business owners get so excited about S-Corps. Of course, there's a catch. First, the IRS requires you to pay yourself a reasonable salary. You can't just set your reasonable salary at $10,000 and then take the rest in distributions. That's a red flag and could get you audited. Running an S-Corp comes with more paperwork. You have to set up payroll, file quarterly payroll tax returns, and keep better records. That often means paying for payroll software or working with an accountant. In addition, you'll have to file a separate S-Corp tax return at the end of the year. So while tax savings is real, it also comes with some added costs and responsibilities along the way. So when should you stick with a regular LLC? If your business is small, maybe earning less than $40,000 or $50,000 in profit, the simplicity of an LLC usually makes more sense. The cost of setting up payroll and paying for accounting help might actually be higher than any tax savings you'd get. At that stage, keeping things simple is usually the smarter move. But when should you consider an S-Corp? If your business is consistently earning $70,000, $100,000 or more in profit, the tax savings can be significant. At that point, even after you factor in payroll and accounting costs, you're usually still saving thousands of dollars a year. That's when making an S-Corp election really pays off. So S-Corp versus LLC, which one's better? Here's the bottom line. LLCs are simple, flexible, and great when you're starting out. S-Corps add complexity, but can save you thousands of dollars once your profits grow. Every business is different, so always talk with a tax professional before making the switch. If you found this video helpful, hit like, subscribe, and check out my other videos for more tips on running your business a smart way. Thanks for watching, and I'll see you in the next one.